Hello guys and welcome to a new deep value video. Today we're going to deep dive into the financials of Oracle Corporation, ticker symbol ORCL. Oracle is a company operating in the tech industry. As of the 9th of September 2024, the stock price stands at $141 and has a market cap of 390 billion. Moving on to some key valuation metrics, the company's price to earnings ratio is 25.4, while its price to cash flow ratio is 20.9. Now let's take a closer look at the company's growth over the past 5 years. You can see that its revenue has grown by 35.5%, while its bottom line has increased by 3.3%. In terms of earnings per share, there has been a growth of 20.4%. However, it's important to note the change in the number of common shares outstanding, which stands at 2.82 billion, reflecting a minus 14.2% change. Additionally, the interest coverage ratio is 4.57, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities, which that stands at 0.71. Looking at the long-term debt to equity ratio, we find it 8.25 and the overall debt to equity ratio at 9.4, suggesting a high debt load. Now, let's transition to the cash flow statement. Cash from operations is 18.6 billion, reflecting a change over the past 5 years of 42.1%. Meanwhile, cash from investing activities is minus 7.3 billion, showing a change of 174.7%. Furthermore, cash from financing activities is minus 10.5 billion and has changed by 72.1% over the same period. And lastly, free cash flow has grown by 42% during the same time from 13.1 billion to 18.6 billion. It is projected to go down to 12.9 billion in fiscal year 2026. Moving forward, let's look at the return metrics to see how well the company is utilizing its resources. The return on equity is 164.43%. The return on investment is 17.63%. The return on assets is 7.63%. And crucially, the ROIC, return on invested capital, stands at 15.3%. Finally, let's find the acceptable buy price. The first method is conducting a DCF analysis. By using a discount rate of 10%, a revenue growth rate of 6.5% for 10 years, and a perpetuity growth rate of 1.5%, we get a fair value of $63.2. Secondly, using a multiples valuation of 20 times trailing 12 months price to earnings, operating cash flow, and 25 times trailing 12 months free cash flow, we get a fair value of $123.9. Finally, the analyst price target is $150.8. Putting it all together, we get an intrinsic value of $112.6. And using a 15% margin of safety, we get an acceptable buy price of $95.77, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I rate Oracle as a whole, as I do not believe that it's too highly priced, and I would consider investing in it only if its price dropped to sub 110, 115 levels. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.